Hey all, my name is Paul Borosky, and I am the owner of Quality Business Plan, as well as the author of Nike's Beginner's Guide to Financial Analysis, Nike's Financial Report, as well as the Beginner's Guide to Understanding Financial Statements and Financial Ratios, which is for sale on Amazon.com. And what I'd like to do today is introduce you all to an extension of Nike's 2021 financial analysis. And for this version, for this video, what we're going to be doing is we're going to be analyzing Nike's cash position and short-term equivalencies or cash equivalencies for the last 5 years ending in 2021. All right, so with that introduction done, let's dive into the meat and potatoes of this video, which is analyzing Nike's cash position for the last 5 years. So the cash position is going to be found on the balance sheet. And from my analysis, in 2017, the organization's cash position was about $3.8 billion. In the next 2 years, the organization would slightly increase their cash position, ending 2019 at $4.4 billion. However, in the last 2 years, the company would substantially almost double their cash position in 2020, ending the year at $8.3 billion, and then again boosting it up even further to $9.8 billion in 2021. Now, what I like about the cash position, first and foremost, is that we do have consistency here. For 3 years, we've got a range of about 11.1 to 11.3% of sales, which is good because this shows that the organization is being consistent. Now, and I get that the pandemic hit about 2020, and the organization might have wanted to beef up their cash position just because they don't know what's going to happen. It was a huge shock for everybody. So they more than doubled their cash position, which also more than doubled their cash position as compared to sales. Again, what I like with the organization is they kept this trend consistent. 22.3% of sales, 22.2% of sales. So again, that tells me the organization is really embracing consistency with their cash position. However, in my most humble of opinions, I would have liked to have seen their cash position fall a little bit in 2021 because the pandemic had been set in for the year. I would like to, let's get back to the normal operations here of carrying cash at about 11%. But the organization didn't do that. They actually kept it at the 22% of sales. So the good thing is the organization is consistent with their cash position, and they did respond to the external market by increasing their cash position when the pandemic went in. And also their cash position is growing, which is, again, some other good things. But for the negative of their cash position, I would have liked to have seen their cash position fall. So I got more details in my financial report that's on my website if you want some in-depth reviews or some more additional reviews of their cash position. As for the short-term investments, the organization ended 2017 with $2.3 billion in short-term investments. In the next 2 years, the organization's short-term investments would fall to $197 million. Now, we do not have the same consistency as their cash position as their short-term investments. So I'm not a big fan of that. We're lacking consistency with this line item. It would have been better for them to have a consistent short-term investment. I'd even like it to be growing instead of reducing. This tells me that the company is tapping their short-term investments and they're using it, whether it was for growth, paying out dividends, or for operations. They're using their cash position and they're using their short-term investments. So is a little bit of a concern. However, the organization does change that trend starting in 2020 to jump up to $439 million and then to $3.5 billion. That huge jump in short-term investments to $3.5 billion, and they still have a huge cash position of $9.8 billion. So, again, the cash position looks good, but their continued jump in short-term investments, that's significant. That's higher than their previous 4 years. I would hope that the company would be able to take some of those short-term investments, turn it into some long-term investments, whether it be property, plant, and equipment, paying out dividends, what have you. It's better than keeping this money in their cash, so it's making a little bit of money for the organization, but it's not as optimal of usage in my most humble of opinions. I'd rather see this money kicked over into the long-term investments because it is quite substantial. Not all of it, maybe $1 billion of it or what have you. It's just very substantial. All right, so hopefully this, real quick review of Nike's cash position as well as their short-term investment position was helpful. For more information, I do have a company report for Nike. You can find that at qualitybusinessplan.com/public company financial reports. And on that webpage, I do have a Nike financial report for 2021, as well as a beginner's guide for 2021. Biggest difference between the two is the beginner's guide does not have my analysis for the various line items. Also, if you're looking for a good book to read and to better understand financial statements and financial ratios in general, check me out on Amazon, amazon.com/author/Paul Borosky, and I do have some real good beginner's guides to financial statements and financial ratios. So hopefully this information was helpful. As always, give me a thumbs up on YouTube if you liked it, and have a great day. Thank you.